Okay, so here's the video. I'm going to be going over both trades that I took. I was 1 for 2. I made $176 today. And then I'll show you why my thought process was the way it was and why I took the second trade, even though I said I'm only going to be limiting myself to one trade per day on this new Expressive Funded account. But so we had we had high impact news at 10, and this was the 10 o'clock Judas swing from the high impact news after we ran these highs. And why was I expecting bullish prices? So I was expecting bullish prices because of what happened earlier in the day. So we have sell side liquidity down here on the 15 minute, come down, sweep it, and then look at the candle bodies, all closing within this BISI. And that's exactly what you want to see. 15-minute sell side raid, delivering from the same 15-minute for value gap. We go to the 5-minute. What do we have? Same thing. If you want to narrow this down or make it bigger, 5-minute fair value gap. Midnight open price. Look at the candles, the wicks respecting midnight open. Once you have a candle closure above midnight open with fair value gaps being left behind, that's a great sign of price wanting to go higher. So 15-minute liquidity taken, and ES was telling the story. We also had SMT divergence here. So this is that. I'm going to make this a different color. That's that 15-minute BISI, and then here's ES during that same time. So this was 9:45, 9:44, 9:32. You can see this is the low day, and ES took its low from 9:40, and then ended up going higher. But ES was showing signs of wanting to go higher. Why? Same thing. 15-minute for value gap. Reused. I'm sure it's like a 30-minute one or something too. Let me see. Yeah, 30-minute looks even better. But 15-minute sell side liquidity taken inside of the fair value gap. And actually, let me add the 8:30 and midnight price because I don't know why they're not on here. 8:30 and midnight. Same thing. ES is respecting midnight as well, refusing to even go below it, doesn't even touch it. And then, so what are we looking for? We are looking for buys, buy signs, buy signal signs, I should say. So that red line was the 15-minute liquidity that was taken. And what are we looking for when higher time frame liquidity is being taken and the price is bouncing from a higher time frame fair value gap like the 15-minute one right now? Price is respecting the midnight open, and we're in a higher time frame bullish environment. We're looking for a market structure shift and a willingness to go higher. What do we have? We have a market structure shift on ES. This is my entire thought process of how I was looking to form my trade on NQ. And then right here, market structure shift, change in the state of delivery. Last candle that took liquidity. And right here is all I needed to see. We were starting to leave breakaway gaps, and we came up and took out this high. This was the obvious clean high that I was sticking out to me before 10 o'clock news, which is what took us up into this. So I wanted to take NQ just because it was offering more volatility. It was offering more chance at a bigger P&L, so that's exactly why I took it. But one of the biggest problems I've had in Chop, in trading Chop, is not putting my stop loss where it needs to be. And I either need to wait for a lower entry so I can put my stop where it needs to be, or just be completely okay with putting my stop loss where the trade idea is actually invalidated. And that's what every single top trader that I follow and that I watch and I study, they all do that. They're not concerned about the money. They know that the money will follow once that the trade ideas actually play out. So the trade that I took, which was a loser, I was 1 for 2 today. I made $176. I took this trade instead of waiting for this lower inverted fair value gap once again. And I was expecting this low at 1014 not to be taken out because of how fast this wick on this candle was created when this happened in real time. So we came down, touched into this, and pretty much exploded to the upside and just closed. And when I saw that, I was like, damn, that low is probably not going to be invalidated if we're going to go higher. Where is my jaw on liquidity? This high. Why this high? Because I've learned from studying ICT and myself this week that these lone highs are very high resistance liquidity. It takes a long time to get up and take these kind of highs out. They're standalone. There's nothing around besides this high up here, which made it a little easier, but I'm sure you remember the trade that it took on ES targeting that high, and it was absolutely AIDS. But so I put my fill at the bottom of this fair value gap, and my stop loss was all I was willing to risk, which was 13.25 points, which was the low of this body of the candle, this down close candle, because I didn't really want to see it break below this upper half, but I should have expected that. Why? Why should I have expected a dip to a discount? And that's also the thing. I didn't even do this when I was taking my trade, which I should have. This fair value gap was in a premium, and I should not have done that. Literally, I could have had the best entry of the day. CE, the inversion, 8-point stop for a 35-point take profit. That would have been absolutely gorgeous. But you live and you learn, and this is why we make these videos. So the fair value gap I longed wasn't in a discount, and I longed up here because this was the closest fair value gap that was left after we inversed all of these. So I thought price was going to run. Price did not run because we were in high resistance liquidity. What do we know when price is in high resistance liquidity? When price is delivering or going into untapped fair value gaps like this, untapped bearish fair value gaps, we're normally going to either take out some kind of internal liquidity or return to a discount of the range and using a pre-existing PD rate like this inverse fair value gap right here. And that's exactly what happened. Like I said, I was not expecting this low to be broken because of how fast this wick was created. And we have all the factors. ES was telling me signs that we were going to go higher. We had the SMT on NQ, which made it the stronger pair, and that's why I was looking to trade this pair instead. So I got stopped out on here, and then here's the second trade I took. Even though I said I only want to take one trade and be done, but I was very confident in that we were going to go up, especially once I saw these two engineered highs get created. That's when I knew that this high was easily in the crosshairs. So I was looking at this fair value gap here. Once again, in hindsight, I should have longed this order block right here. Why? Because this fair value gap was not in a discount other than this bottom half. But even then, this trade was a little better because it was in a discount and I entered off of the high of this order block. But price loves to return to down close candles when price is choppy. And price normally likes to be sloppy inside of fair value gaps like this. And this is what I mean, like a lot of the days price will completely respect the bodies of the candles, will either close out of it or close just above the CE. That's when price is moving very nicely and whatnot. But you can see right here that price is closing below, but we are respecting this order block. In hindsight, obviously, this would have been the best entry, but look at the bodies of the candles when you mark out the CE, the wick. What does ICT teach? The top of the candle and the body, or the open or close, in this case, this is the open of the down close candle, is very sensitive. So as soon as we get that touch into this open or the close, no, that's the open. In this open of this down close candle, we shoot up, create a hammer candle, and then displace. And so my stop loss and entry looked like this. I entered right here at the top of this candle. That is 200.25, and my stop loss was right below this wick. Why this wick? Because it was just below the CE of this order block, and I did not want to see price come below here. And thankfully enough, we came down. I got filled. Risk was 11 and pretty much 12 points, and my take profit was a 2R trade. I should have targeted a little more just so I would have had a winning day, but I did not want to be greedy by any means in this price action. So I took a 2R trade, which was actually before this high, and it was right right here. So I got filled, oh, whoops. I got filled a little bit before that high for 23.5 points. And it was beautiful. I'm glad I took this. Actually, it was a little less than 23. It was like 22-ish points. But regardless, green day. And I know what I did wrong. I know what I have to fix. And hopefully this price action will clean up after this week. Yep, that's all for the journal for right now. This is the recap for January 19th, 2024. And I'll see you in the next one.